you.
Thank you. All right. It's 2 o'clock. Looks like we've got about 11 people in the room. I guess we'll go ahead and get started. Just bear with me for a moment. There we go. So welcome, everyone. We appreciate you joining us. My name is, for those of you that don't know, I'm Scott Evans. I'm the Technology Project Manager for the Forsyth County Chamber of Commerce. So the last 2 weeks is everybody, we're having to shift to a new mode of work. When I go to the beach, one of my favorite things is going into the sand, just knee deep, and feeling the sand wash around between my toes and falling out and under it. That's kind of what it feels like right now. Everybody that I'm talking to is the sands are shifting beneath us. And so we took a really aggressive approach last week. We wanted, because most of us on staff has been through a recession, not to say that and wish that that's where we're heading, but we know what happens when we go into one. And so we're trying to be prepared and trying to be aggressive and if we do go into a recession, to at least mitigate it as much as we possibly can. So just a little housekeeping before we get started. I sent everyone an email that registered for this about an hour ago. These platforms, these teleconferencing platforms, was never meant to handle as much traffic as they have. They never expected the whole world's workforce to be using these platforms. And so almost every one of them last week that we were on crashed in one way or the other. So we asked that in the email that I sent you, pull it up, keep it close by. It has the phone number on it. And if for whatever reason you crash, the system crashes, continue logging in, but do the phone number first. That way you don't lose much of the conversation, and then you can come back in with video. But we ask that you be patient with us. It takes a lot of stress off of the system if we keep your camera and your audio muted. And so I've got a coworker in the background to help us with that. And so you're only going to be able to hear me and the two panelists today. And lastly, we're going to have a facilitated discussion in the beginning. I'm going to ask the panelists some questions. Up at the top right-hand corner, you see 4 icons. One of them says chat. If you will, click on that. If you have a question, enter in your question there. And as soon as we get through the questions that I have for the panelists, I will read those questions out and we will answer those from there. So just bear with us a few minutes. So I've got 2 friends of mine. We've been having Alex Warner, who is our existing industry that works with me in economic development. He's the one that's helped me in the background here. He's become our resident expert in all things SBA for the last 2 weeks. And I've asked him to jump in because there's going to be some overlap. You won't see him, but you'll hear him if there's a question about SBA that comes up. If it's specifically about SBA, we want you to go and do one of his seminars because he does an hour-long seminar. We got such a response out of it that we did one, and we're doing 5 more. We've got 5 on the books, but every one of them is filling up. And so he's going to continue doing those SBA seminars as we speak. And going back to the shifting sands, this information is changing moment by moment. And from the moment that me and the panelists have gotten on here, there's already been some important information that's changing the landscape again. So just bear with us. But I want to thank my friends Carter Barrett and David Hogan to joining us. Carter has 30 years in the banking industry. He is the founder and CEO of Community Business Bank, or he was until he sold it just a few years ago. But impressive that he started that bank at the beginning of a recession and was able to thrive and sell it on the back end of it. Now he's the market president for Affinity Bank and a serial entrepreneur. David is a commercial real estate lender for the past 17 years with a career in accounting and a family business. He serves as president of the Rotary Club of Lanier and Forsyth and on the board of the Forsyth County Chamber. Actually, both of these guys are on the chamber boards. They are my bosses. They're good friends, and thank you for being with us.
Thank you, Scott.
Thank you for having us.
Absolutely. I've designed a few questions here that I want to ask that really has come about, like I mentioned a moment ago, that came out of Alex's seminars. And so what we don't get to, we're going to go over into the chat sessions and pull those up. But before we get into the heavy meat of this, I want to ask both of you, starting with you, Carter. Let's talk about the human side of this before we get into the finance. So what's the bank doing with its employees? Because we have a new terminology that I think has come into our lexicon in the last 2 weeks, essential business. We know that the banks are essential business, but give us the human side of this. What's happening inside the banks? Because, you know, the expectation is the banks is always there, but we know that some workforces are working from home. How are you guys affected by this inside the workforce?
Well, thank goodness, as evidenced by this conference call right now, there's so many ways to communicate and do business today that you can practically do your job out of your car if you have to these days. So mercifully that works well. Obviously keeping people safe, clients safe, employees safe, and respecting and treating this horrible nightmare situation with the respect it deserves is paramount. Or else it's just going to continue on and on and on for longer than it should. So we are doing essential business. Lobbies are closed, but people are able to bank remotely. Closing loans or opening checking accounts using DocuSign, things like that. A lot of different ways to skin a cat today, and so really, business is just not disrupted much at all. Personally, I went to a brokerage firm the other day. I realized that the place was physically closed, but it's not a problem at all. I was able to go to a bank and deposit money just like normal through their ATM machine, and then wired money that way. So there are many ways to do business today. It's really not all that disruptive. Maybe if this had happened 25 years ago, it'd be a much bigger issue than it is today.
Both of you know that I spent a little time working inside of a bank a few years ago, and it being a heavily regulated industry, there's a policy for almost everything, but there is no policy written anywhere for any business, any industry that says the whole workforce in the world is going to shut down for at least a few weeks. All right. What about your bank, David? United Community. Is there you guys doing anything different? Probably the same things.
Absolutely the same things. I think you'll find that all the banks right now are closing their lobbies with drive-through service. You can still go into the bank. You have to call ahead for an appointment. Only one visitor at a time allowed in the bank.
Really?
Yes, that's correct.
They're monitoring that at the door?
Yes. So you call ahead to make an appointment to come in, and then we'll be able to visit them. Electronics, as Carter said, the technology has completely changed, and I think it will be even changing more going forward. This is definitely the kind of moment where a lot of people are realizing how much they can do electronically, and I think it will change banking permanently along those. We were headed that way, but it's going to be more so now. For me, as a relationship manager, I'm drinking from a fire hose right now. It absolutely has not changed the business. It's actually busier than I've been in a long time. Not always positive, but there is a lot of positives still happening. So I'm pleased that we're able to still serve our customers and do what we need to do.
I'm glad to see that they're using DocuSign. I remember back in my banking days that everything had to be done right in front and notarized in front of the lenders. So I know the legal profession has been using DocuSign for a few years. That's got to be a big help in these times. So lot of you, well, both of you probably know, but my career was the past 20 years. I worked in helping businesses recover, heading towards bankruptcy, having them turn around. My last was a manufacturing company in 2009 where we saved it from going into bankruptcy in the middle of the recession. And I had to do an SBA note. But I know from my career, making choices at the very beginning when you see it is the most important part. And you have to deal with the shifting sands that you don't know, you don't have all the information in front of you. But you do have a great resource in front of you. And I think because we're going through this all together, David, you and I had talked about, some of the things that the people that you need to start talking to early. You want to get into who you need to reach out to for your business?
As a businessman or as a banker?
I'm sorry, as a businessman, you're one of those people, but I guess like your CPA.
Carter and I actually spoke about that, and it's funny that you should bring that up. So I'll let Carter answer that actually right now because he was absolutely right in his response.
Okay.
Well, Scott and David, as y'all know, after selling our bank, I sort of invested in various and other sundry types of real estate projects, businesses, things like that, before I moved back into banking at Affinity Bank. But so I can relate to the entrepreneur out there, the business owner, the professional, the real estate investor, because I have been that guy. In my experience,
audio.
Oh, we did?
No, I can hear you.
Okay.
Yeah, you guys are fine.
Okay. Good. In my experience, y'all remember? Everybody remembers the Tylenol scare in Johnson and Johnson, and,
Yes.
and they've probably seen some other examples of where that was almost a textbook situation where they handled a really impossible situation. Yet Johnson and Johnson and Tylenol is still alive and well today because of how they handled that. You've seen other situations where people had a calamity in their business and they absolutely just went away. The Enron and Arthur Andersen, some of those stories are sort of, you think, well, that wouldn't handle quite as well, obviously. And in my experience, the people who survive in situations like this, the businesses that thrive, I read the other day that a whopping percentage of households in America can't even write a check for $1,000 in an emergency situation. And so I'm going to imagine small business is living close to the edge as well in many cases. Even though we've had a great economy for a good long time, a lot of folks have not been able to they've invested in their companies, have been growing. It's exciting when the economy is booming, and they've been reinvesting in the business. But a lot of people haven't built up enough of a war chest for the down times because this was that black swan event just no one saw coming. We knew that the possibility was always out there, but it's usually the left cross that comes out of nowhere that takes you out. And that's kind of what this situation could potentially be. So in my experience, as evidenced by the last downturn and the financial crisis, people who sort of wait and hope and think it's going to get better, that's a bad strategy. The folks who thrive and get through things like this are the ones who have a very crisp, well laid out plan of action to go forward. And you kind of assume the worst. And then anything less than that is just a gift. The first person I would call, I'd be calling my CPA immediately. We've got great local CPAs like Ann Margaret Johnson, Rick Lee, Charles Cole, those guys. There's a lot of great talent out there. The first person I would call would be those guys. I mean, I'd be talking about my budget. I'd be looking at every expense item I had, and I would put everything out on the table and consider those possibilities. You've got to assume that your revenues from many industries are going to absolutely be hammered. So you need to allow for that accordingly. Now, if you've got a war chest and you've got a couple $1 million sitting in the bank, good for you, but I think you're probably an anomaly or an exception. So for me, I would have a war footing right now. I would be talking to my CPA first and find out, and I would talk about doing a revised budget for the next 3 months, 6 months, even a year, to look at every expense item, everything from payroll to my rent to my every line item I can. I'd be looking at my balance sheet and those items that my current ratio, those current things that are coming that are due, and who those vendors are, and those types of conversations. So the first person I'd call would be my CPA. I'd say we need to get into a war footing. Let's talk about how we're going to get through this crisis. We know that sometimes, like in the downturn, the herd is cold. Some of your competitors are going to go away. So when you get to the other side, you may find yourself in a fortuitous position as an entrepreneur, but you got to get to the other side first. The second person I'd call would absolutely be my banker. I'd call guys like David. He's a great banker and a great resource. He's got all kinds of things that they're talking about at the bank that can maybe bring some relief to the business owner. Payment deferrals, increased lines of credit, things like that, things to provide that short-term working capital or that relief that the business owner needs. All that every bit of this needs to be on the table. Next, I'd be talking about, I'd be talking to my landlord if I'm renting space, and all my other vendors as well. There's a ripple effect that's going to flow through this thing. I'm an investor in a co-working company. So that's going to be a really interesting industry to watch and see how the ripple effect flows through that. But if you're a landlord and you've got tenants and your tenants can't pay you, now all of a sudden you've got the bank on the other hand, and the bank's expecting to get paid. Well, then you better be having conversations with your clients, your tenants, to figure out how that's going to affect your model. And then you better roll over and talk to your banker as well, because maybe a David can bring some relief on that front. Sorry, David, go ahead.
Let me bring David into that too, because you just hit most of the things that I wanted to bring up as well. But all the bankers are telling us they're wanting to be flexible. Banking's a regulated industry, so you've got a pretty defined path that you can walk down. But I do know that there are, I know it from the 2009, 10, and 11, that we have options on the table that, it's just not normal options, but they are on the table. Can you talk a little bit about what you guys are, when you say you got flexible options, what are those?
The regulators have eased our restrictions and things, and what you're talking about is modifying loans for businesses that are in trouble as a result of this COVID virus would be considered troubled debt restructures. And that affects our capital and a lot of other things. But in this case, the regulators have eased those restrictions.
David, we've lost your audio. We've lost you for a second.
Okay, am I back now?
Yeah, you're good.
Okay. So the regulators have eased those. So we are being given a lot more leeway. You discussed about whether we'd be able to do these deferments or interest-only periods. We can do those, and we're not getting hit by the regulators. So
really,
yes, really. So that is happening, and we are able to do that.
See, that was one of my big questions. Is early on in 2008, when I was in the banking industry, the regulators, we were running such a tight path with regulation. Again, we were a de novo bank, an early startup, but the regulations were so tight, we didn't have a lot of options. So you're saying that through that, they've learned the regulators have also learned to adapt as well. Is that correct?
Yes, and they also understand that this is a short-term issue. So I think that it's a combination of both of those.
So if putting myself back into the manufacturing company, when I walked into my banker, I didn't really know what my options were because I had just left the banking industry and I didn't think that they could work with us. But putting myself back into my situation, I've got a $1.2 million loan, and I've got to readjust everything. So if I came to you as my banker and said, David, here's my situation. I've taken Carter's advice. I've gone to my CPA. I've got a 3, 6, and 9 month plan. I need your help. How would you look at that? What would you say to that person?
We are immediately, well, I hope I had called them before they called me first.
Really?
Your bankers should be calling their customers. I know Carter's doing it. And I know I'm doing it. We need to be proactive and be sure that we are talking to our customers in order to let them know that, hey, we're here to do solutions. So when they do come or we approach them, we ask them and discuss what the issues are, and we are immediately given authority to do deferments on the loans, either interest only or complete payment deferrals for a period of time in order to allow them to go through that. And I'll let Carter speak to that as well. I think most banks are doing it, and I know Carter's is as well.
Okay. Carter, you want to throw in here?
Yeah, David's exactly right. The banks we're smart enough to understand we're in this together, and cooler heads prevail in these situations. This is uncharted waters, so we've all got to be flexible. Frankly, it's in our own self-interest to use good judgment and restraint. And so banks deferring loan payments like Affinity Bank is routinely for their existing customers. They've got a principal a loan with term payments, a term loan with principal and interest payments. They are routinely deferring those payments for clients that need it for up to 6 months, just like that. So taking those principal and interest payments and moving them to the back end of the loan. Now interest will of course continue to accrue, but that's a lot of relief in this environment, providing additional working capital lines of credit for existing customers that if you're a dental practice and all of a sudden your cash flow, your customer base has just stopped. Your doors are closed. You're not seeing there's not a cavity being filled probably incoming today. So understanding that business and understanding how this will be disruptive for that, but knowing that this is a temporary thing, the banks are bending and they're creating programs to accommodate that. But you as a business owner, please don't sit back and just wait and watch, because there are things available. Some of the banks will proactively call you, like David was saying. I know David's doing that, and I am too. And Andrew Bell at our bank is doing that enthusiastically. A lot of other banks are not. A lot of banks are just sort of waiting and watching and letting you call them, and they've got these programs in place. But if you don't call them, they won't know. You ought to be speaking to your banker anyway. I hope you're talking to your banker a lot. Your banker should be part of your inner circle for the rest of your life, not just for this crisis.
That's true.
It's a great resource for you that you can pull upon. If you don't have a board of directors as a business, then you essentially have a board to your CPA, your insurance person, your banker. But lean on those guys enthusiastically. Your banker, though, you ought to call him immediately and just let him know what you're thinking, how your business is being effective, what you expect, and sort of see how they're sounding as well. Find out what kind of bank you have.
So, back to my experience in the manufacturing company, I actually did, I think the 7A SBA note, is that the one with the real estate bank?
No, that would be a 504.
504. Anyway, that was a 6-month process. The moment I walked into the banker, said, here's my situation, here's what I want to do, I want to recapitalize, I want to restructure, it was a 6-month process. So we'll get into the CARES and the things that's happening politically in just a moment. But again, this was 10 years ago, but it was a 6-month process from the moment I walked into the banker's office to actually getting a check, and that check was what saved that company. We had stopped the internal bleeding through management decisions, but it was the working capital that we got that actually pulled us out and started heading up. So if I walked into you right now, the problem that I have let me rephrase that. It's not a problem, but the challenge is if they pass the CARES Act this afternoon, we're still looking at 30 to 60 days before that money flows out. So we've talked about
Scott.
Yeah,
it's not going to be that long.
No. Okay. No. Okay. And this is exactly why we set this up, because we want to get the worst thing that I've been seeing is a lot of speculation and a lot of the whole reason we're going to start doing these Ask the Bankers twice a week. But just so we have this open forum, but the main thing, the goal here is to dispel any rumors or innuendos or things that's not true, and let us know what the situation is. And I've already learned a lot from you guys, and I appreciate it. So, what's the time frame, you think?
We're expecting let me go through the process first, and then we'll talk about the timeline. So, when we were talking earlier, Carter and I, we were preparing for this meeting, and we were talking about where the bill stands. It was passed by the Senate and was still awaiting the House. In 30 minutes, it's been passed by the House now. Any information we're giving you now is changing minute by minute. It is absolutely amazing to watch what's happening and very difficult to keep on top of it. It's like the news conferences you see every day. It changes all the time. They might say something, but something will be different the next time. So it is passed the House now. We all expect it to go to the president today, and he'll sign it. The SBA then will write the guidelines for this. They'll write guidance for the banks. Mm-hmm. This bill allows them up to 30 days to write that guidance. They're not going to take 30 days. They've already promised to expedite this and get it done quick. Our SBA division and our bank is expecting us to have the guidance by the week of April 6th. That means we'll be able to start taking applications then. The guidance isn't out yet, so I'm holding papers here that are legal opinions. People are interpreting the law as to how they think SBA will interpret the law and set these guidance out. So these are interpretations and due to change. So don't accept it that this is just how it's going to be, but this is pretty good guesses of where it's going to be. There might be minor tweaks. The underwriting guidelines will be much different than the underwriting guidelines for typical SBA loans. That's not to say everyone right now, advise your customers, advise your businesses, advise your friends, anyone who's considering doing this, go ahead and gather your financial information, including payroll records. Go ahead and update your personal financial statement. You can download an SBA personal financial statement form or talk to your banker. I've already sent out a number of those to people saying, get prepared so that as soon as this comes out, we can serve you and get that money out. So the underwriting guidelines are a lot looser. So I would expect money to start flowing, maybe not the week of April the 6th, but by mid-April. I don't see a reason why we can't start flowing. That's not to say everyone's going to get it, because we are going to be hit hard. So if you're prepared and ready and get that in early, you're going to be first in line. There isn't a queue yet, but as soon as we get the guidance, we fully expect. We can't request financials or information yet because we don't know what the guidance is. But we do know we'll need financial information, personal financial statement. Even with the personal financial statement, these loans we're expecting, and the law and the guidance says that they're non-recourse. No personal guarantees, no collateral required for these. So in any case, I just recommend everybody get your financials, get them current. That's why you call your CPA first.
Okay.
Carter?
Absolutely, David. And for heaven's sakes, make it as easy as possible in your banker by providing clean, good information that's understandable. Make it know that your banker is going to be absolutely swamped for the next 30 days, and so make it easy on him. Provide the information in a good, clean format that's easy to access, that they can understand, and help yourself move to the front of the pile, because the easier and the cleaner your information is, the faster they'll be able to address it for you. But absolutely.
I want to get to the Q&A side in just a moment, but I got one more question, and this is something that just popped into my head. It's not one that I had written down, but so what I'm familiar with, and Alex may want to step in here as well, but for the short term, you've got working with your banker, you've got loan deferrals, lines of credit, interest-only payments. Then, we have the SBA with the emergency emergency disaster
relief fund.
Yes, and you've got CARES, and then you've got 504s and 7A. So taking away the lines of credit and the stuff that you do in the short term with your banker, what's the difference? Help me wade through this alphabet soup. The CARES, EIB, or emergency disaster, and 7A, 7B, 504.
The 7A is actually the CARES Act is a 7A loan.
It is
falling under 7A. It's just going to have a different guidance on it, on the underwriting etc. For example, 7As require personal guarantees and require collateral. This is not going to require that. So this falls under the 7A. There's a lot of provisions in it. Even the lawyer's review of it, I have 5 pages just on this. So, and that's the lawyer's. You're gone again?
Can you hear me?
I can hear you. Can you hear me?
I can.
Yeah, you're fine, David.
I can hear you fine.
Okay.
There's 5 pages.
5 pages is just the lawyer's interpretation of the 7A of the business. It's essentially the Paycheck Protection Program. So if you look at the HR 748, so and it shouldn't impact anybody's eligibility for other loans and what have you. So
Okay.
that's going to be important. There is a provision in here, and it's open to interpretation still, and I'm sure Alex has noticed it as well, where if they have gotten money from the disaster relief, the disaster loan program, they would be precluded from getting this money under this program to the extent they have received the disaster loan. Does that mean they get no money from this program, or do they just reduce this by the money they received from the disaster relief? That's still open to interpretation. I hope it's the latter, and that they can still get this if they got disaster relief.
Okay.
But until the actual guidance comes through, there's a lot of information in here that we're just interpreting what they would interpret.
David, what do you out of all those, or certainly the two, the CARES and also the economic disaster, which do you find more intriguing right now? One we know more about, one we're information's rolling in as we speak. Which of those two do you find more intriguing at the moment?
I'm unfortunately not that familiar with the disaster relief fund because that is not administered through the banks. I think what the SBA has found when they started that disaster relief fund is they were having website crashes. A lot of people were attempting, couldn't get through, couldn't get it completed. They weren't able to accomplish the needs of the business community. And I believe that's why the CARES Act now is being administered through banks. They have essentially passed their government assistance program to the banks in order for us to administer it and hand out the money. That way they're not inundated and unable to actually provide the funds in a timely manner.
Would you say that while the information is still forthcoming, I mean, we'll know a lot more on Monday than we know even right now. Would you, if you were the entrepreneur, would you be calling your banker this afternoon to sort of, I'm going to imagine that most banks are going to have a flood of phone calls about the feedback. And I would probably want to get in the queue today with a David Hogan if I were an entrepreneur and customer of David Hogan.
I've been taking 5 to 10 phone calls a day on this CARES Act before it was even fully passed by the Senate. Once it was passed by the Senate, I was inundated, as is every lender that I know with their customers, because and hopefully their lender or their banker gave them the advice that I've been giving everyone is gather your financials, get ready. We don't know what it's going to be exactly, but we do know that it's coming. And so get those financials ready. That's the best advice you could give everybody right now. Call your banker, absolutely. Make sure they're on board and they're ready and they're going to be prepared, and get them prepared for you to bring the financials and apply for these loans. Absolutely call your banker. I hope most of you have spoken to your banker already. If you've not, call them now.
All right. I want to take this question that's in the chat from Ricky Lee. What are your bank's expectations for turnaround time of paperwork / guidelines from the federal government to the banking institutions such as they can process client applications? Are we looking at days, weeks, or months?
That's a great question, and that is what I was addressing, is where we expect it. The head of our SBA expects to have the guidance the week of the 6th, which means we'll be able to start doing the underwriting, gathering the information from clients and applications. So we're really looking at not necessarily days, but weeks. I hope that we should be starting to hand out money perhaps the week of the 6th, because the underwriting guidelines are going to be, they're not going to be like what Scott dealt with when he was working with the manufacturing company, because we're not going to be required necessarily to underwrite it as though we're looking for the full ability of them to pay back. I know that sounds very strange. These are 100% guaranteed. They have loan deferment for 12 months. They have loan forgiveness. What those guidelines are going to be on the underwriting guidelines, we're going to have to make sure that they weren't companies that were in trouble prior to the COVID virus. It has to be legitimately a result of this virus for them to get these funds. So that's going to be our primary underwriting guidelines, is to make sure that this is a true request and not just somebody with their hand out. Do you have any input on that, Carter?
Yeah, if I put my entrepreneurial hat on, now we're going to go see David. I want to emphasize the fundamentals are the fundamentals, and if you're in a war, this is sort of tantamount to being in combat, trying to come up with a plan to get to the other side safely on this thing. What I don't want to do is just, hey, this could be interesting. I just heard him say portion of a loan program, maybe forgivable, things like that. And all of a sudden that piques my interest, right? And it's certainly intriguing. And, tell me more about forgivable. Listen, right now, we're in triage. I'm going to go see my banker friend David if I'm a business owner, and I'm going to have with his help, I'm going to come up with a very realistic plan, a substantive plan to take my business from here to the other side of this event, COVID, and substance over form. The different loan programs we're talking about, that's going to be very important. And certainly the most intriguing is the piece that's mentioned in the CARES Act. As you know, the information is forthcoming. We'll have a lot more information first, even early next week, and even this afternoon. But let's not lose the forest for the trees either. This loan, that loan, whatever. This is about survival for your business right now. And the better job, if I'm an entrepreneur talking to my banker friend David, the better job I do sitting down with him, coming up with a realistic plan of my current state of affairs, what my burn rate is, what my expenses look like, what my revenue is current looked like last month, and what it's likely to look like over the next 3 months. And coming up with a realistic plan, the better job I can very simply put forward a plan to David, the more likely I am to have him say, okay, we've got you covered on the financing side. But substantively speaking, a lot of business owners right now, and the exact timing of loans and those things, consider talking to your banker about the bank and the traditional things that the bank has to offer to support their customers. Whether SBA loans and CARE Act and all that aside, can I compel David or my banker to say yes to my plan to get to the other side? And frankly, I'm going to have him help me create the plan, because frankly, psychologically, he's kind of taking ownership of me when he's helping me come up with a strategy to move forward. So I'm going to be talking about the substance of getting my business through. The form, the exact loan type and what that looks like, and maybe there's a windfall that's forgivable, that's gravy. But right now, come up with a realistic plan, which is, I'm talking to my CPA, I'm talking to my banker. What am I going to do about my expenses to keep a lid on those things? What's going to happen to my revenues? And what kind of working capital am I going to need to bridge the gap for the next 3 months, a year, half a year even, to get through this tough period? Substance over form, come up with a realistic plan. What's the working capital need, and how am I going to get it, David? And then he'll fill in the gaps with you the best way to accomplish that. Which loan program is best for your business? That will be easy. Those are details. Right now, work on the substance of the thing. You may need additional capital outside of lending. What you don't want to do is go borrow a bunch of money that you don't necessarily need. You don't want to end up with a mountain of debt at the tail end of this thing that you are responsible for taking care of in the future, and hamstring your business in doing so. You may be looking at raising other capital other ways. It might be friends and family. It might be talking to other investors. A lot of people are thinking, oh my gosh, the sky is falling. Other people, we're all business owners and entrepreneurial types and bankers. Other people are out there looking there's going to be opportunity created in this environment as well. This will ripple through the economy and it will, there will be pain over here in one way, but you'll see opportunity over here on the other hand in another way. So we don't want to just hide under the covers and think the sky is falling. Let's be nimble and creative and think of ways. We're going to all feel some pain right now, but there will be other opportunities as well that emerge. So
I'll tell you this. That's one of the things that having this conversation is it seems different. Back in 2008, it seemed like the world fell apart and everybody ran to their own corners and started shooting at each other. But what I'm hearing from you guys and is we're all going to walk through this together because we understand, this isn't the collapse of the financial institutions. This is a stopgap because of this virus. I want to get to this next question. Given the potential volume of loans, will banks have sufficient funds to address the loan applications they receive? Whichever you want to take that first. David, do you want to hit that?
Sure. It's an excellent question because that is something that our leadership put out immediately about how our liquidity is. And we're in a very strong liquidity, one, because of regulatory requirements that have come post-recession, two, just learning from the post-recession. These banks have much higher liquidity than they did in the past. And if it's through this 7A program, we also have the ability to sell these on the secondary market and take that liquidity back. So there is.
Doesn't affect your loan loss reserve, then, does it?
I'm not sure about that detail. Whether we would. I don't think we would because these loans as well are 100% guaranteed by the SBA.
Wow.
So no, I don't believe we'll have any loan loss reserve for these.
I know that's a banking question. That gets really into the weeds, and I'm sorry I threw that out there, but ultimately that does address Mike's question because what that does is it gives the banks a longer runway to extend more funds.
Mm-hmm.
Yeah, the banks are, for the most part, in the time that we ran my previous bank, they closed 89 banks in the state of Georgia. It was such a calamity. The financial meltdown was so calamitous that you could literally look at every week there was a bank being closed or several banks being closed. Today, the banks are, as a result of that, to David's point, they're just much stronger today. We're in a great position to lend. We're in a great position to weather this storm. That's not going to be an issue. The bigger challenge right now is going to be the bankers are going to have a lot of work on because they're going to be getting a lot of phone calls from existing customers who need support. So that will be the bigger challenge now. Not that the banks have the resources. The banks, I think, are in better position now than they've been in a long time financially to certainly weather this. Some of the banks will be impacted by this. That's just common sense. The real estate investor that leveraged up too much and went too far too fast and has tenants that are now struggling to pay him, he's going to feel that. So that's going to filter through the banking system, but the banks are just in very good shape today, in Georgia especially, and I just don't see that being a problem at all. I can't wait to get out there and support more people and grow this bank. I know Andrew Bell is calling every single day. He's on that phone talking to his clients and friends nonstop, reaching out, looking for new opportunities for the bank. We're here and ready to do business.
So we got another question from Ricky. Any information in regards to what Carter and David is addressing about planning for afterward? Any background about business being able to use these loans to retool themselves for new market sectors, processes, expecting current customer base to take longer to recover, can go stronger customer business sector, go after stronger customer business sectors? Either one of you want to?
That was an earful.
It was.
Yeah.
I'm still.
I know this from listening to the SBA. You can't use this money to consolidate any loans already, but this is a good time, especially when operations slow down, as a I'm using my management hat at this point. If your business is disrupted, now's a good time to readdress maybe some issues that you had that were okay. They were working because you were just busy. But the question is really about money. Can you use this money to go after new market sectors after the crash?
Hey, Scott, I'm going to interject here just off of what they're doing with the disaster relief loans because we haven't seen exactly what the new CARE Act is going to include. But for the disaster relief money, you cannot use it for any sort of expansion of the business. It is only used for payroll and processes to keep you in business today. So we're not sure if the new CARE Act is going to allow you to help grow the business or if it's just going to be there to help fund where you are and what you're going to be doing to keep you in business today.
Okay.
I think Rick is asking what we would do as banks for customers that are actually getting stronger during this market. We're absolutely still out there lending money. So if there are good customers that are not being affected by this, or good customers that may have been affected but aren't necessarily in need of these rescue funds and are looking to invest and become stronger during this time, absolutely, we're here to help. I'm still doing new loans. I'm still, doing loans for strong customers, doing loans for new customers. So that's not stopping.
This isn't 2009 where everything just stopped.
Right.
This one's very different from 2009. 2009 was so much broader and deeper, and it just went on and on and on and on. And it affected so many folks. There was a time in Forsyth you couldn't give away a piece of real estate. It was bizarre and I almost think unimaginable. And you look back at it now and you think it's kind of hard to get your head around how profoundly strange that was. This is a shock to the system, a short-term left cross we didn't see coming. But it's sort of easy enough to model out and look what it's going to do to cash flows and to existing businesses. Some businesses will have the wherewithal to press right on through. Some are a little leaner and they're going to need to bridge the gap somehow. Some will go away entirely. But there's so much talent in the business community in Forsyth County, and a collaborative approach to business. And Forsyth has always been the way to go. They're talented. If you're a great idea person, you see an opportunity today, but you don't have any money, well, go get some money people in your Rolodex. If you're a money person, you don't have a good idea in your head, go get some idea people in your Rolodex. The collaboration and helping to bridge those talented people in this community. There's still, listen, I just choose to be an optimist. This is still America. We've gotten punched right in the face, but this is still the greatest place in the world, and there's opportunity beyond opportunity once we get through this. So we've just got to pull together for a short while and get through this little bump in the road, which we will. The economics and the math of finance involved, this is not even super complicated for a guy like David Hogan. He can easily do some modeling with you about your business and see what's required for you to transition from this side to that side. But this is still Forsyth County. There's opportunity. There are acres and acres of diamonds of opportunities out here. So we just need to keep our wits about us, keep our cool. The banks are going to be there to work with you, and we'll be even more prosperous this time next year than we were this time last year. We just got 6 months.
To add to Carter, he's absolutely right. That last recession, it was a direct hit on real estate. It was a direct hit on financial institutions and banks. This one is not. Yes, we'll be affected, but we're carrying forward. We're stronger. Like Carter's bank, like all of our bank, his bank, he was brought on as a market executive because of how strong they are. They're growing, and they're going to continue to grow. That plan has not changed for any banks out there. So absolutely, we're going to continue to invest in our customers, the business sectors, and what have you. I don't see that changing.
I'll share with you guys this. I've been attending some seminars this week geared specifically to economic development professionals like myself and Alex. And one of the things that they're talking they're telling us is tend your own garden, and what they're saying to that is, seeing the disruption in supply chain, they want us to start working with our existing industry to start helping farm smaller businesses that if you get all of your stuff from China, then start developing some of your vendors to or maybe some neighbors to start supplying some of your products, so you're not dependent on one supplier. And I think that's one of the things that they're telling us that, and I think, well, again, I want to really stay away from speculation, but that's what they're teaching us right now in economic development going forward, is start tending your own garden and working with your current industry to help grow smaller businesses that can work together in a more close proximity.
Scott, that's maybe my favorite comment of this entire conversation, which is because in the last 3-4 years, people, entrepreneurs, investors, we've had such an abundance of everything and such a strong economy that frankly, it was difficult to find opportunity. Real estate felt expensive. The stock market the Dow was almost 30,000. It was an interesting time to be an investor looking for opportunities. What you just said just speaks of layers and layers of opportunity in strengthening our country and decreasing our reliance on other foreign suppliers, for example, looking to our local community for alternative strategies for those things. There are now layers and layers and layers of new opportunities that most of us weren't even thinking about 2 months ago, a month ago. Now, I mean, what you just mentioned, think about the face mask thing. You think it's unbelievable that I can't go get an N95 face mask at Home Depot or whatever. And you think, well, gosh, think of all the talented manufacturers we have in America and the opportunities that will be created. And that's a simple, silly example, but it is yet another example. Think of the layers and layers of opportunities that are going to be created based on what you just said.
Well, I did that this morning. I had one customer that I've been working on expanding their business. It's a sewing plant, and they want to start producing masks for the county, for the state. But they don't have all the materials, and so I was able to introduce another person, and together they're going to be able to put these masks together. I thought that was pretty interesting.
Could you get me their phone
number? We got one more question, and looks like we're heading up to close to the 3 o'clock hour. But Mike asked, if a business has sufficient capital to ride through until the end of quarter 2, will there be care funds available for businesses to apply for in quarter 3?
I wish I knew that. There's going to be more stimulus plans put out there. This is the first one, or not the first one, but definitely the biggest one. This does have timelines on it. The covered period on this Paycheck Protection Program is February 15th through June 30th. So according to this current iteration of the CARE funds, no. But that's not to say there's more forthcoming, not more forthcoming. So can't tell you. It's changing. Like I said at the beginning of this call, it's probably changed since we started the call. Carter?
Yeah, my instinct is the answer is yes, but in other words, it's not going to be cut so fine that they're distinguished between this quarter and the next quarter, but rather the overall assessment of the need right there. But I would say don't delay. I would go ahead and get in the queue now in anticipation of the financial need third quarter. So I would have an urgency about this. I would want to be the first one in the queue, not the last one in the queue. So anticipate what that third quarter need is going to look like, but treat it as if the need were next week. Have an urgency about it, but I suspect that you're going to be fine with a working capital need in the third quarter.
I don't, and I don't see anywhere in here where it outlines, and we'll have to wait for the guidance on what people's capital position is for the underwriting guidelines. I think this is actually a loan relief program just to help any company that's been affected, because you might have that capital, but you may not have the income during this period. So I think that's what this is more being aimed at. Carter?
I'm not sure. I'll defer to you on that. And for the weekend to get a little more time behind us, so we can.
Yes, that is the thing. Keep watching. Keep getting with the chamber. I know Alex is constantly putting stuff out there, and I'm sure as we get more clarity, you'll get the information and talk to your banker. Keep in touch with them.
So this has been like the coffee talk with the bankers, or riding in cars with comedians. Is the riding in cars with bankers? Thank you, guys.
If you be in the car, I want to jump out the window.
Well, thank you guys for participating in this. If there's anybody else has a question, please pop it in the chat room real quick. Otherwise, we're going to exit out of here in just a few minutes.
Well,
You're
Scott,
welcome.
Scott, thank you and the chamber, like David said earlier, for everything y'all are doing for this community. We have a truly great chamber. I'm proud to have been a part of it for almost 30 years. David Hogan is a world-class banker, and I'm a 30-plus year banker, and I can tell you David Hogan is a world-class banker. David, thank you for everything you do. And
thank you too, Carter, and absolutely. I don't think I could say it as well as you did, but same for you. You've led this community in banking, and you're continuing to do it again.
Thank you, sir.
All right. Well, we're going to do this again with a different panel next Wednesday. Same information, different set of scenarios. So I hope you guys will come back and join us then. We'll throw you on the panel if you have a question. We might need your experience there too. Anyway, if that's it, we're going to close out the room. Wish everybody a wonderful weekend. Go somewhere and relax and stay 6 feet away. All right, guys. Thank you.
Bye-bye.